Alright, so today we're going to be tackling one of the biggest challenges in trading, and that's going to be managing negative emotions that lead to poor decision making. So we're going to be doing some psychological analysis, pretty much reviewing some trades and figuring out how the outcome of those trades triggered negative emotions that led to us being on tilt or led to symptoms of tilt, such as FOMO, revenge trading, overtrading, breaking our rules, not sticking to our plans, things like that. So hopefully by the end of this video, you're going to have some practical tips and you're going to have some strategies and be able to identify what your triggers are and how they lead to poor trading, right? We might not know that what happened in our previous trade is going to lead to something negative in our next trade, but when doing this psychological analysis, it pretty much helps us identify, okay, these are our triggers and this is why I made the decisions that I made. So stick around. I do have to review a couple of the trades that I took for you guys to get the full picture and understand how one thing led to another. So bear with me while I quickly review these trades and we get to the bigger picture at the end. Long story short, we came into our area of interest. Price was fiddling around in our area of interest. Pretty much it pushed past, right? It pushed way past our levels of interest. And then we started moving back up. So we pretty much got a 30-point rally off of the levels where we wanted to get involved. And I didn't get any trades set up, right? So I remember while this was happening, I was pretty much pissed off that I didn't get an entry and we missed out on 30 points. I'm only looking to catch a 20-point move throughout the day. So watching the stock move 30 points in my direction without me being involved was doing something to me emotionally. So that was the first trigger is seeing, and that's one of my symptoms of tilt, is missing out on the big move, right? Usually when people miss out on the big move, they'll have FOMO, they'll chase, they'll get in too high, things like that. They'll just chase the stock and get in so they don't get left. Right, and that's pretty much the same thing I did today. So I watched it run 30 points. I drew up this little tiny demand zone right here. I convinced myself that this would be a good place to enter. Right, we broke above this breaker, and there was some demand, so I went ahead and hopped in here. I didn't stick to my A plus trade entry, and I took this instead. I said, oh, maybe this is demand, maybe this is a good place for me to enter. Right, so I entered there. What ended up happening, we started to get a little bit of a pullback. We started to get a bigger pullback. Once we broke below that zone that I entered from, I said, all right, nothing's good going to come from this trade. We're clearly ranging. This is low probability, right? I got out for a small loss, right? And then right after I got out, what happened? I get my actual trade signal. I get the double bottom here and my level of interest, the double bottom, the break above highs, the retest. Down here should have been my entry, right? Down here should have been my entry and my target would have gotten hit. So not only did we have FOMO in our entry that got us into the trade, seeing we missed out on this 30-point run, we also had FOMO after the trade because it hit our target right after we got out, right? So although this is the last trade of the day, I moved on to the next trading day. In the back of my mind, I was pissed off that we had a full win here that I missed out on. Simply if I would have stuck to my plan, waited for my original trade signal, my original entry signal, I would have had a full winner, right? So subconsciously, even without knowing it, I'm able to reflect and look back now, but these are the triggers, right? Maybe if your next trade you get shaken out of it, be super cautious and make sure you look for all of everything on your checklist. Look for your A plus setup, all your conditions to be met the following day, so that the next day you don't just bring those negative emotions into the trading day and hop into a trade that you're not supposed to be on because you just got shaken out of a winner, right? So this is why I said I have to review some of these trades for you to understand how these emotions subconsciously can carry into the next day and affect your trading decision the next day, right? So let's review the next couple trades. Same thing, right? So that happened on Tuesday, I believe. So after getting shaken out of that trade, we had to wait Wednesday for FOMC. I didn't want to get involved. Look what happened here. We pushed up FOMC. We pushed up pretty high. We had a bunch of space targeting back down. I wanted to see price pull back into support, which was previously resistance, new support, right? And some higher time frame fair value gaps. These were my levels of interest. These were my areas of interest. This is where I wanted to see price come back to before getting involved. Keep in mind, subconsciously, because I just missed out on such a big winner, what did I go and do the next day? The next day, I missed out on the full winner. I had to wait all day for FOMC news to drop because it's one of my rules that I don't want to trade FOMC when we're pending a decision to get made. It could lead to choppiness. What did I go and do? Because I couldn't trade all day after missing that previous winner, I had to sit on my hands all day. I had more FOMO, right? I couldn't let Wednesday pass by without trying to get the money back that I could have made on Tuesday, right? So now that's a sign of revenge trading. Not only did I have FOMO, fear of missing out, I had to wait all day, couldn't put a trade on. I had the desire to trade, felt like I had the need to trade every day. I went ahead and I said, because I just missed that last trade where it could have been a full winner, what am I going to do now? I'm going to get tricked by this lower time frame formation, and we're up on this. We're up a decent amount of points. Over 10 points. We're already in profit. But I allowed the lower time frames to trick me into trying to catch a home run because of how much downside potential this had. I allowed the lower time frame to trick me and go against the higher time frame trend just so I could try to catch this home run. And what happened? I got in late. I broke rules. I got in after 2 p.m. trying to catch this home run, trading outside of my hours that I normally trade, causing me to have to hold this position overnight. And what happened overnight? I wasn't aware that there was news dropping and price shot up and stopped me out. So boom, that's another loss. Why? Because I hopped in that trade, trying to revenge trade, trying to make back the money I could have made on Tuesday, not paying attention, being seduced by the lower time frames, right? Having greed of trying to catch that huge move that could possibly, just because we had space to the downside, I tried to catch a move that was going against the higher time frame trend and wasn't paying attention and got stopped up by news. So again, this can lead into errors the next trading day or the next trade, right? So that was on Wednesday. We entered the trade. We swung it into Thursday, right? And we took another loss. So Thursday, after taking that loss, we get another setup. We get another valid entry signal, right? This is after taking the loss here. Coming into supply, we get a bullish entry signal. I go ahead and take it. But I was eager to make money, and what did I do wrong again? Look at the time where we executed this trade. After 2. I got stopped out. I was sick all day, right? I'm supposed to have one execution a day. Either I have one loss, I'm done, or I have one win, I'm done. I took a loss overnight, and I was supposed to be done for the day. But what did I do? I placed another trade. So now I'm breaking rules. Notice how just from one trade earlier in the week, look at this chain reaction of almost 3 trades of poor trading decisions. From one loss, and a small loss at that, in the beginning of the week. And it wasn't even the small loss that caused me to go on tilt like this. It was the fact that I missed out on gains. I didn't even have the gains. It was just the fact that I missed out on being able to get them. Caused this chain reaction of FOMO and revenge trading. Right? So just being able to say, damn, I got shaken out of this trade. Let me be extra cautious to make sure these next trades check all my boxes. Right? So although I took my proper entry signal here, right? We got highs, low, higher high, low, break of those highs, retest. That's a proper entry for me. But it's outside of my trading hours, right? If this would have occurred at 10, perfect. More than enough time for price to move into our favor, more than enough time for price to move to our target. But because I took this trade at 2 o'clock, because I was so eager to try to make some money, because I wasn't willing to walk away and say I'll trade on another day, the market is abundant of opportunities, I tried to take this trade here, and I ended up having to swing again overnight. And what happened? Stopped out overnight. Right, so all of these losses could have been prevented. The loss on Wednesday could have been prevented by me not trying to trade against the trend. The loss on Thursday could have been prevented by me not taking a trade at 2 p.m. outside of my trading hours, outside of my trading zone, right, which is between 10 and 11. And in the previous trade, this could have been prevented if I would have stuck to my original entry signal that I'm looking for. Right? Low, high, lower, low, break it at high, retest. Instead, what did I take? This bogus demand zone. Why did I take it? Because I was so eager to not miss out on any of the move higher after already missing out on 30 points. Not anything that the market told me, not anything that was happening that the charts told me. Simply emotions. I was eager. I had fear of missing out on the next move. Right? So that's how we can identify. And again, all of this entire chain reaction of events happened from missing gains on one trade. Right? After I broke one rule and didn't take my original entry, it went ahead and made me make poor decisions for the rest of the trading week. Right? So it's that simple. Here's the key takeaways from it. And for the people, who stuck around, these are some of the biggest things. These are how you identify those psychological mistakes that you're making and remove them from your trading. If you're able to identify these things, if you're able to know where you went wrong. Now keep in mind, when I was a beginner, I would have just had this trading week and I wouldn't have, I would have just been pissed. I would have been trying to figure out why the market hates me. I would have went into next week trying to do the same thing, carrying those same negative emotions in, not knowing that, okay, these are the mistakes that I made. Let me take a step back. Let me take a reset. And let me tighten back up how I know I'm supposed to be tightened up. Let me lock in how I know I'm supposed to lock in. Right? So here are the key takeaways from the week. Stick to my setup. Stick to that breaker block setup that we're seeing. Right? Stick to that low, high, lower, low, higher, high. After we create a breaker, take the retest. Stick to that setup. Right? That's all I have to do is continue to look for it. The simple fact that I didn't stick to that setup started this entire chain reaction for the week. Luckily, I'm only down like $17 for the week. Could have been way worse. Could have been way, way worse. But luckily, the damage was minor. So stick to the breaker block. That could have prevented the first trade from being a loser. Second thing, stick to the direction of the trend. Right, on Wednesday, I tried to short. The higher time frame trend wasn't short yet. I even said before I got into the trade, I would like to wait for an M pattern on the 1 hour to signify that the higher time frame could be changing to bearish. I took the trade and I didn't get it. Right? I took the trade back here. There was no M pattern. There was no signs of reversal. There was no structure being taken out to the downside on the 1 hour for me to even be bearish. Right? I simply got seduced by the lower time frames and by carrying in those negative emotions from the previous trade. Right? Stick to major levels of support and resistance and supply and demand. That was another thing. I took this short and it wasn't at any reasonable levels. It wasn't at any apparent levels of structure. Right? Again, where were we waiting for? We were waiting for price to come back down here before we got involved in any trades. So stick to your levels of interest, major levels of support and resistance, major levels of supply and demand. Right? Remain patient and understand opportunities are abundant. If you have FOMO, if you missed out on the winner, if you took a loss, don't try to make it back the next day on a less than A+ setup or less than A+ conditions. Right? Understand, I'll be able to make this back. It might not be tomorrow, it might be the next day. Right? It might be the day after that, it might be next week. But whenever the market gives me the conditions that I need to see and the setup that I need to see, that'll be my chance to make it back. Don't try to force it. Don't try to impose whatever you want to happen in the market. Wait for things to align properly. So again, Tuesday we saw that 30-point rally from my area of interest without offering us a setup. Right? I took an entry that wasn't in my plan. It's because I didn't want to get left out. That's FOMO. Right? We got shaken out of a winner because we didn't wait for the proper entry signal and we didn't have conviction. If we would have taken our proper entry signal back here, we might have had the balls to hold this properly. But because I didn't take my proper entry signal, I lost faith in it. I didn't have conviction. Right? So notice how that makes the trade fall apart as well. Taking something that you haven't tested, taking something that you don't know if it's proven to work. Right? So here we go. Don't allow missing trades or taking losses to cause me to overtrade or take low quality setups. right? Don't try to make up for those losses or even missed gains. Even if you didn't make anything and you just missed out on the chance to gain, don't allow that to influence your trading. These are symptoms of tilt that lead to poor trading decisions. Tuesday, we missed out on gains. Wednesday, we traded after 2 p.m., right, outside of our trading hours, and against the market, trying to catch a huge move to make up for the money that we could have made on Tuesday, right, which is FOMO and revenge trading. Then we got stopped out Thursday morning from Wednesday's short that we swung overnight. That was another thing. Why am I swinging? Right, if I took the trade at 10 a.m., it could have hit target by 1. I wouldn't even had to swing. Right, so now I have to swing overnight, which is lowering my probability even more because of a decision that I made to take the trade at 2 p.m. Right, so then I got stopped out Thursday morning, and what did I do? I broke another rule. 1 execution a day. Either I buy and sell, or I swing overnight and sell. That's done for the day. But I took a loss Thursday morning and entered another position. I don't do that. I trade once a day. Right, again, no need to overtrade. If I take a loss, there's plenty of time to make it up. I trade once a day. For whatever reason, because of this chain reaction of negative emotions, because of this chain reaction of poor decisions in my trading, I broke another rule and placed another trade on Thursday. Again, after when I was supposed to trade, and what happened? I got stopped out Friday. So the biggest takeaway is stick to my setup, stick to my trading hours, stick to my 1 execution a day, stick to my areas of interest and my high probability trades, stick to trading with the trend, and regulate my emotions. Don't think that, just because I've been winning, I've been having really good success for the past couple months. Don't think that just because I've been able to make things happen that I can come to the market and make the market do what I want it to do. Right? There was a lot of things that I did wrong this week. Just because I was having success for the previous couple months doesn't mean it's just going to keep happening. I have to continue to execute flawlessly in order for that to keep happening. And this week wasn't flawless execution. So, I know this is a lot about my trading, right? And the mistakes that I made, but I want you guys to be able to consciously identify, these are the triggers and these are the things that led up to the poor trading. Right? When I was a beginner, I wasn't able to identify that this was poor trading. I just thought the market was out to get me. I just thought this was bad. This was just a bad sequence of events. I don't know what happened. But now that I've been here long enough, now that I know, even something as simple as saying, okay, if I would have waited for my strategy, we would have had no problem. I would have had the conviction to hold it. That comes from experience, and that comes from testing, and that comes from journaling and seeing it happen over and over again. Right? And even this psychological analysis comes from it happening over and over again and being able to see it. Knowing that I felt this emotion of missing a trade or missing out on gains so many times. So when it happens again, I'm having FOMO right now. Seeing it rally 30 points from my area of interest can cause me to make poor decisions. Right? So, and again, even I made the same mistake. I'm aware that these are my triggers, and I still on Tuesday allowed that to make me make a bad trading decision. But the fact that I have the awareness now to spot that, understand what improvements I have to make, understand what adjustments I have to make for next week, now we can lock in. Now we can prevent those. Again, I'm only down $17 this week. I'm not down $1,700. Lock in. Get back to where you're supposed to be at. You can bounce back from anything as long as it's not catastrophic. We're still managing our risk properly. We're still trying to keep our losers small. Make those adjustments when it's time to make those adjustments, not when it's too late. Don't wait until you've blown $500 to try to say, okay, now I'm going to wait for my setups. Wait until after you had a week where you lost $17 and you made some bad decisions, come over this list, make your improvements, identify those triggers, and lock back in next week before it gets bad. Right? These are the things that we need to identify psychologically. The strategy does not matter. The technicals do not matter. It's going to come down to execution every single time. You could have a 100% win rate strategy, and if you're not executing it properly, you're not going to have success. The psychological factors are what determine the execution of the strategy. The psychological factors are what determine the execution of the plan. If you're not where you're supposed to be at psychologically, you are not going to be able to have success. No matter what trading strategy, no matter what your plan is, you are not going to be executing it or applying it as it needs to be. So this is what's important with trading. This is what's important with trading. Again, look past the fact that these were my trades. Take from. We all have these emotions that we're feeling in our trades. Identify them in your trades. Identify when you felt FOMO and you took a loss, or you could have prevented a trade that you shouldn't have taken, and apply this to your trading to take apart and take away what you need to take away from this. I'm just showing you guys the blueprint, or the footsteps and the footprints and the steps that I take to do this psychological analysis. Right? Trading is and for the people who are done with the video, this is a sidebar. Right? I've already said what I need to say. But trading is a game of self-awareness. Trading is a game of self-mastery, mental mastery. Trading is a game of self-improvement and self-development. You're going to learn a lot about yourself. You're going to learn a lot about the way you act, the way you think. Right? And people who are very self-aware and who are able to do this psychological analysis and who are able to break down how the way they're thinking and the way they're acting is being impacted. People who are able to break down how the way they're thinking and acting is making an impact on our trading are going to be the ones who are going to be able to make the adjustments they need to make and learn the things that they need to learn in order to be successful. So that's why I'm so big on this psychological analysis, on the psychological aspect of this, because that all affects how you're applying whatever strategy you have. There's a million strategies. There's a million trading plans. None of it matters if it's going to fall apart when it's time to press that button. Right? So, again, hopefully you got some tips, you got some strategies, you got some triggers that you can identify. Take it away, apply it to your trading. Again, the market is going to offer endless opportunities. You don't have to make it back tomorrow. You can make it back another day. You can make it back over time. Just prevent catastrophic events from happening. Right? Event major damage from happening to your account. And make those adjustments when it's time to make those adjustments before it's too late. Thanks for watching. Make sure you guys subscribe. Leave a like. Let me know in the comments some of your triggers. Let me know how you identify them. Let me know if you're able to combat them. And I'll catch you guys in the next video.